Hey, hello everybody. This is Coach Gary Massari from REI Fortunes LLC, and I'm very excited to bring to you this presentation today. Just a couple things real quick. We're going to take a few minutes while people get signed in to the webinar, and I'm going to show you how the webinar really works. First of all, you need to know that you want to grab your pencil and grab a note tablet and take some serious notes. And here's why it's important. What we find as investors is that people call us up and they say, hey, I got this deal and it's really a great deal and you can make a lot of money on it. And then they give us an address and they have no control over the property. They don't have a contract on the property. And we get tons of calls every day on that. So by the time this webinar is over, I want to show you how you can put together an extremely valuable presentation that's going to make you a lot of money, and you're not going to leave any money on the table. I'm going to show you how to calculate it, the right offer and profile your buyers and your investors so you know what they want, so you can maximize their profits as well. So it's going to be really cool. So stick around, and I'm going to just step out of the window for a couple seconds, and I'll be right back. But we're going to get this thing, rocking on here. And as you guys start signing in and let a few more people come in, we'll get this on the road. We're actually going to do a live webinar. We're going to go online. We're going to show you basically, I use Redfin. I'm going to show you how you can comp in 10 minutes and do it right. And I'm going to show you a program I wrote for you guys that shows you how to average the prices. So we're going to really dial in on what we call the ARV. That's the average repair value. So Tamara's on there. Thank you. John Adams on there. Hey, Corbin's on there. Joseph. Okay, good stuff, man. All right. So again, you can write and type your messages at the bottom. This is Q&A. I'm going to answer them. After each subject, I'm going to stop and ask you questions, and then you guys go ahead and shoot your answers. If you want a question, just click over here. If you can see this, it's called raise your hand. So if you could speak, it would be pretty cool. So we'll allow you to speak as well. But mostly we're going to be working on the question side of it. That's very, very important, okay? That we get the questions in here for you guys. So how to do comps in 10 minutes and do them properly is what we're going to be doing. So let's give it a few minutes here to get everybody on board so they don't miss everything. And I'll come back to you in a few minutes, and we'll get it all rocking and rolling for you. Okay, so I'll be right back. So don't go away. I'll be back. Okay, I'm back. I see some more people are signing up. I'm going to put a poll up here while we're waiting for some more people to log in. And so just give me a few minutes to answer this poll up here. If you can see it on your screens, it does have about a 2 or 3 minute delay here. So tell me what you're interested in. Short-term strategies to create income, because I will address that in the webinar for you. And long-term wealth building strategies, or both. A lot of people get into this to replace their job income or to increase their lifestyle, and they just want to make short-term income through what we call wholesaling or fix and flips. But the whole really purpose of real estate is to invest in what we call revenue-producing assets. And what that means is that you want to invest, whether it's single-family properties or multifamily units, whatever your condo conversions, hotels, whatever, shopping strips, whatever you want to invest in, so that you can have you can own an asset that's depreciable and at the same time could take advantage of market appreciation. So it's growing equity for you. You build equity two ways. You build equity when you either pay off the debt of that particular property, or you can build equity as the market allows it through appreciation. So I always recommend that you do both. And then once you get your equity really built up in properties, that you leverage that, and then you invest it in other properties to grow your asset base. Because the more appreciable assets that you have, obviously the more wealth you're going to build and the more residual income that you're going to have in real estate. So when you come into real estate just to make money, I think you're kind of missing it, to be honest with you. It's all about procuring assets, retire rich, and by managing rentals. And by the way, you can always put those rentals under a property manager. So we call it remote control real estate. So don't get carried away that you have to be calls at 2, 3 in the morning where a kid flushed down a teddy bear in the toilet, or you get a call that, the roof's leaking. Okay. At, 3 o'clock in the morning, and you got to run over there with your rain hat on and your so forth. So, all right, I think it's about time to get going on this. All right. So we're going to start really with Redfin. So just hold on a minute. I'm going to do a screen share, and then we're going to come back and ask some questions. So go ahead, and I'm going to put the questions back on, and we'll put this back on later to see what it is. So right now I'm going to go ahead and publish it so we can see what the results are. And I'm not getting anybody doing the poll. Maybe you guys aren't seeing the polls on here. So we'll come back and we'll do that at the end here. So let me go back to the chat section here, and we'll get this thing going for you. Okay. So now we're on the chat session. Okay. I want to build instant cash flow. Here it is. I want to build instant cash flow, wholesaling, and then move into the fix and flips. Yeah, Jeff, that's a great strategy. That's really what we want you to do here. Replace income. I agree. Yeah, you want to get your income replaced because you're going to be free of any job income or checks. You're going to be working for profit, and you're not going to be working for wages. That's really true. Short-term strategy to gain income. Yeah, both. Lisa says both. Okay, good. Okay. Hello, everyone. Thanks, Lisa. Nice having you on here. Rick, hey, good to have you here. Okay. Satima, good to have you here. Don, good to have you here. John, I'm glad you're here. He's one of my partners. Okay, so we got everything. All right, so let's get on with it. Let's do a screen share real quick. And I'm going to take you into Redfin, and I'm going to kind of give you the layout of how you can actually do comps in about 10 minutes and how fast it is. And I'm going to take you over to another slide here. So let's just look at a property. This is actually a property that we're working on right now. You can see the nice picture of the property, but I want you to look at the top here and to make sure that you guys can see this. Could you please let me know that this is in your screen and that you guys see this? Could somebody please say yes? I want to make sure on the screen share that we got you covered here. So just put there, yes, you can see the screen, to make sure I'm not talking in the wind here. Okay. So go ahead. I'm just giving you a few seconds here. There is a time delay. Okay, good. Thanks, Stephen. All right. So here's how you get your comps. Across the top, you have what we call an overview, Redfin estimates, public facts, listing details, tour insights, property history, schools, neighborhoods, similar homes. Now, again, I'm preparing this and I'm going to teach it to you. So we're going to go really in depth here. I'm going to show you the 10-minute way of doing it. And then I'm going to do it the professional way that you could put this together with photos, descriptions of properties, so you guys could really, really do a good job of comping properties out. The whole key in whenever you're doing wholesaling or rehabbing, understand this. You need 3 things. You need to know what we call the after repair value. We call it AVR, okay, ARV, after repair value. And we also want the as-is value, but we need to know about the rehab. And I'm going to teach you a real shortcut to rehab estimates called what I call the matrix. It's a design that I developed for you to make it very simple. So it's going to be a lot of stuff. So stick around, man. Don't cut it short, because this is going to make you guys a lot of freaking money. All right. So let's look at this. I don't pay attention to what Redfin does on estimates, because sometimes they cross over freeways. They pull together neighborhoods. They cross over different neighborhoods. We got to stay in the same neighborhood. Usually it's good to pick an area where you know what the models are and what the square footage of those models are. And you're going to have an easier way if you're just coming into it. And I'm suggesting you pick neighborhoods, if you're new in the business, under $1 million. So write that down, under $1 million, because you have what we call a declining market right now. I'm going to show you how powerful this market is and how fast it's declining. In July and August, it started turning down. So your comps better be September, October, November, please. All right, when you're looking comps, and I'm going to show you that. But let's look across the top here, if you don't, okay. 3 bedrooms, 1 bath. Actually, this property is 1.5 baths. And I have actually visited the property. I know the property. It's 1,140 square feet, and it's estimated at 632, according to, Redfin here. So that gives you a little bit. It was built in 1964. Now, those are very, very valuable facts. Okay. You can also edit some of these facts and change them if they're incorrect up here, by the way, which is a good feature in Redfin. Okay. So let's just stroll down a minute. Now we know what we're looking for. Here's just an overview. Look at the trends of sales since 2013 as it goes up the ladder. This is a good indication as to where the values are going. If you just slide this along here, you can really see what the percent of appreciation has really been. Now, I'm going to tell you something. This thing now is going to be trailing down, and this neighborhood is just slightly reflecting that, and I'll show you where that is in a minute. So you got a declining market, and if you're in wholesaling and rehabbing, my friends, you're going to have to adjust for it. Now, let me give you an example of that right off the bat. Let's look at these two comps here real quick. Here's one that sold in July, pretty comparable, July 6, 18 for $785,000 on Lanai Avenue in San Jose. Now, this is a neighborhood. You can see it here. See the map below where it says A, and up here it says A and then B, so you can kind of see that these are in the same neighborhood, and it's not across the freeway. Now, look at what happened to a comparable home, comparable amenities. Now, I click on those, and because Redfin is driven by the MLS, okay? So know that these are real comps. That's why I use Redfin. But look at the price on a similar property, a 3-2, almost identical amenities, right? I'm telling you, when you look at the pictures, they're identical. And the market value has dropped from 785 in July down to 709, right? Folks, that's almost a 10% drop. So remember, this market climbed over 2 or 3 years, like 48% growth. It went wild. So now it's starting to calm down. Inventory is building up. You got to be aware of that, because when you go into these comps, the average rehab in the United States last year, or this year, I'm sorry, was 181 days. So you got to allow yourself 3 to 4 months of construction time and then 2 to 3 months of sales time on the market. Okay. So just be careful of that. Now, you got a map there that you can make it bigger or smaller, but you can click on these and you can see what happens. You can quickly look in minutes to see what the comps are. Here's one, all right, that sold on Joplin for $758. Here's one on Tampa, $875, but that sold back in April. So I'm not really crazy about that comp. Okay, I'm not crazy about this, but I do like this comp over here on Cunningham. So that's a good comp that I'm going to use. So now let's go over and see what happens here. Okay, B. Okay, let's see what happened in B. Okay, Cunningham. That's it right there. Oh, here's a nice comp. Look at this one I'm on deck. No, I actually drove by and I saw this property. Okay, and let's find out if that's a really good rehab property, because that looks like a pretty good comp. Here's another one that sold for $925, but it's a smaller square footage. But let's find out. This one just sold for $735, same floor plan. So let's look at this one in detail. Now let's click on that and go over here and look at that. Now let's look at the photos here. See, this is tied in the MLS. That's why it gives you everything. This looks like a pretty nice home that we can use as a comp, right? Very nicely done. Okay, nice yards. Low water, by the way, in the yards. That's cool. Look, now this is a rehab. Look at the nice hardwood floors. They painted the fireplace. Really looks nice. They got a wall furnace in there. That's something we got to look at. But we're going to compare that, okay? Okay, that kind of really looks pretty sharp there, right? Not a light. Dual pane windows, nice front door. Okay, it's a lot of great pictures here. Look at the kitchen, how they did the kitchen now. They opened that up when you come in, right? Look at that, beautifully done. See the nice kitchen, how it's all been remodeled? So this is what we call Rehab A. This is the top of the line for this particular market. And the reason you look at these photos and these details is because you don't want to overdevelop and give your profits away. You don't have to do it. So what does it take moderately to rehab this home? Do you see how fast I can comp this on Redfin? Like in seconds, I already have the value down. Boom. Okay, it's that easy. See that? So now you got a really good idea. They used a kitchen bar for quick breakfast, which is a really good design. They put, see-through over here to keep it well lighted. It's opened up. It has the open floor plan. You either got when you're looking at floor plans, write this down. They're either, the floor plans could be what we call, obsolescence. We call it physical or functional. Functional means the floor plan is like a maze. You know, today they want open floor plans. So it's really dated. Well, that's functional obsolescence. Physical obsolescence means the home is deteriorated, you know, dilapidated. I mean, the home is in bad shape. Okay. So just think about how important obsolescence is. So anyway, I think you get the idea on the comps here. So I'm going to put a question up here right off the bat. I'm going to give you guys a question. The question is simply this. After reviewing those comps, okay, do you feel that you can really see the value of the amenities by clicking on the picture and looking over the property to get a feel for what the amenities are? Because you're going to be comparing square footage of the home, square footage of the lot, the age of the home, right? And then you're also going to be comparing not only the age of the home, but you are also going to be comparing, right, the neighborhood of the home and the amenities of the home. All of those are important factors over here. So I'm going to go ahead and type in, if you have any questions at this point, okay, tell me what amenities, and put it in there, what amenities did, forget my spelling, did you see that added value to the property? Okay, so just a few of you, if you don't mind, kind of put in there, you know, what you saw as the amenities that maybe added value to get that value up there in the property as we went through it. Okay, so that's very, very important. So go ahead, and while you're doing that, we're going to move on. But I wanted you to see the difference in there and how much that really meant on the values. Okay, all right. So let's go down a little bit here and learn more about what's in this home or neighborhood. Okay. Now I clicked on that home. I'm going to get back to the original here. Okay. And just hold your eyes. I'm strolling. I know it's crazy when you're on these things. I always read the description of the property. That's very, very important to know. Is it been updated? Is there granite tops? You know, does it have central air conditioning and heating? You know, is it an open floor plan? What are the things that are significant to bring that value to that to the value that the property sold? Because if you're going to sell the property, either wholesaling it or fixing it or rehabbing it, you obviously you have to know the question to the amenities. Okay, now look at this. Here's some facts on the home: square footage of the lot, also, you know, the square footage of the property, when it was built. Very important that you really capture that information. Okay. Here's all the details of the property, and you should be reading this, by the way, to find out, you know, what is really included in this property or what's not included compared to other properties. So the detailed description of the property is very important. Okay, does it have a garage? Exterior features? Okay, all of these are answered here as you read this. And when you read things like granite tops, new appliances, then you have a clue that this is a rehab property. Okay, are you with me? All right. Then you look down here for the school ratings. Okay, so it does tell you what the school ratings are and, you know, the distance that they are as far as the ratings go. Okay, so here's your ratings: 1 out of 10, 4 out of 10, 4 out of 10. Okay, so gives you an idea of what the ratings are in the schools. Now, also, there's something interesting here. Here's a median price of what we call East San Jose, but notice it crossed over the freeway. So I'm not going to pay attention to this. If it was in the same neighborhood, I would. I'm going to show you the difference in a minute. But see, it crossed over a freeway. That's a different neighborhood. Okay, so it averaged 2 different neighborhoods in here. So just be careful of that. Okay, so maybe these comps aren't not going to be as good. So I'm going to show you how to pull comps in a minute here. But it gives you just an idea, a broad brush, that you can think, oh, this property, if it's rehab, is somewhere in the high 6s, low 7s at this point. Now, there you go. Island in the kitchen. Very good. Tabletops, doors, cabinets. Yes. Good job, Joseph. Good job. Let that right. Okay, what about the site? Looks like it backs up to King. Is this a busy road? No, it's not, Joe. Okay, so yeah. In fact, it's on a very, I see you know the neighborhood. but it backs up to other homes. Okay. All right, good. Better on Redfin. No, Redfin, a realty track does not give you these type of details. Redfin is far in excess of, again, it's almost like having the MLS. That's why I use it. You can see all the details here, okay? All right, I think I got that. All right. Want to know wholesaling for an income? Then, yeah. Okay, we covered that. Now, I want you to notice the trends here. You see this? The red is the listing line, I mean, the sold line, and then the listing line. The listings are, still coming up here. So they're starting to curve down on this curve. But look at what's happening here to the solds. And done very, very quickly, it's starting to drop. Now, I'm telling you this. There's a couple things we're going to do. I'm going to teach you how to adjust this, which is really, really easy. But you got to you're looking at a 10% drop in market right now. And we just were at a meeting Saturday at an expo where the experts were saying it was 10% drop across the board of Northern California. But, in this one, it's still stabilized. So I adjusted the price here about 5%. And I'll show you how I do that in a minute here. Okay. Here's similar homes in the area. Okay. That you can look at and you can kind of see how quick the price is on these. Now, it doesn't tell you whether it's sold or not. These are kind of like listings at this point. Okay. So, here's the homes that have sold. Look at how fast you can do this. Same model, 741, but it's back in June. It's the old market. Here's a good comp here. Look at this one, 735. We just talked about that already. That happened in September, which is a pretty good comp. This comp is probably behind a little bit, but this is in a whole different neighborhood. It's across the freeway. I already checked it out. By the way, this is a test, what we call a desktop review. Write that down in your notes, desktop review. There's also an on-site review. I've done both in this cases for this webinar today. So you guys are going to get it. Okay. So that's it. So Redfin will give you the information of homes on the market for list, the homes on the market for sell. You can click on that and get all the pictures and the details, and you're going to be making like for like comparisons. Now let's just look at a couple of them. Here's a property that I picked, okay, that sold recently, and I'm going to bring up my analyzer. I'm going to show you how I do this. But here's a property that's 3-bedroom, 2 baths, 1150, pretty close to the same square footage, built in 1959, selling about $659 per square foot. Now let's look again at the amenities of this property. By clicking on here, you can see the rating here. It's got Corian countertops. It's got nice wood. Those probably oak, right? Countertops. They could be, I don't know if they're laminated oak or, solid oak. My guess would be laminated. But it's got some nice appliances, but it's really not decked out. It's not open. I would say this is kind of like a B rehab, maybe a C rehab. Look at the nice backyard. It has a nice garden shed back here. And it also has a nice overhang for a nice backyard. So, I mean, but it's not dressed up. They don't have a built-in barbecue. So I would probably rate this more like a B to C rehab. Okay. So I want to give you the comparison here. Now, if you notice, I can go right to the listing details by clicking this on, right? Okay. And I can measure this and see what it says. Kitchen description, gas, dishwasher, garbage disposal, microwave, oven, refrigerators, okay, interior, laundry, flooring, okay. I also want to know about, does it have built-in heating and air conditioning? So that's very important, okay. Then I can find this on here. Let's see, bedrooms, 3. All right, bathrooms, right. The age of the roof is important because the age of the property, if it's old like that, it's probably going to need new electrical and new plumbing, and then probably required a new electrical box that went in there. Okay, and there's the schools. Of course, you can look down and see what the measurements are, the ratings on the school. Now, here's a little trick. If they give you this percentage, what you want to do is multiply this percentage right here times the square lot. The square foot of any lot. So you take what we call, of an acre. That's basically based on acre. So the square foot of an acre is 43,560. Okay, so here I'm going to type it in for you. 43,560 square feet. And then what you want to do is multiply that times that percentage here, and that'll give you the square foot of the property. All right. Okay, with that being said, I'm going to get off the screen share. We're going to go back and we're going to look at our analysis a little bit. And I'm going to show you how I put all this together. But I'm going to take some questions at this point. Okay. Did you guys get, I'm going to type the question in here. Tell me, did you get a good feel, okay, of the property value very quickly? Okay, how many of you guys got a good feel of the property value by just looking at that particular property and clicking on that map and looking at the different comps and looking at the pictures, that you got a feel for that, whether those properties were rehabbed or they were just plain Jane type properties? Let me see what you're saying in here. I'm going to hold this open for you a little bit because I want you to get those questions answered. So did you get a feel by using Redfin how quick that you can get a value of the values of those properties very quick, very fast? And then we're going to show you how to tighten it up a little bit. Okay. So let's see. Wall heater. Yeah, Rashawn's got that. What about the site? Yeah, we're going to look at that. Yeah, we were talking about it. All right, go ahead and answer your questions here if you got them. Okay, okay, let's go. Bruce. Okay, we got you, Bruce. Bruce, I don't know if this is the, go ahead and talk if you can, but I don't know if this is set up with your, like it is, whether you have vocal or not on that. But what you can do is go ahead and ask your question, okay, or type it in. Okay. So if you can speak, let's see if I don't know if I can hear you or not. Okay, so let's go ahead and then just type it in if you get that, okay? So I'll keep it up. Yes, Tamara says yes, 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 yes. I think everybody feels pretty good that they got a good value for that property by just looking at the comps here and figuring it all out. All right, well, what are we going to do with this? Okay, now I'm going to take you here, and I'm going to show you how I do it, and I'm going to bring you up to my analyzer. Would that be okay? Okay, right here. Let's do this. We're in another screen share. Okay, now I'm going to show you what I do with those comps and how it works. And now I built this system, which, shows you how to make an offer. I'm going to go over that with you in a minute here. But I want to show you these comps. Now, these are the comps that really were in the neighborhood, not across the freeway. And we actually drove by these comps and looked at them physically on a drive-by to see how they, what the neighborhood was like and so forth. So I can tell you the key comp here was Montego, okay? Montego is the one that we really checked out. Now, look at this here. Here's your subject property up here, 1,140 square feet, 3-bedroom, 1.5 bath, lot size 5,500, age of the property, okay, built in 1964. Now, we picked Cunningham, same model, 3.2. Now, notice this was a 1.5 bath. This is a 3.2, okay? Lot size, pretty comparable, built in 1964, same builder, and it sold for $709 September 17th. So that's a pretty good comp, wouldn't you think? Okay, and it took about 20 days on the market to sell, and it sold at a square foot price of $622. Now let's look at this other one at Kion Avenue, excuse me. That's a little smaller home, built around the same time. It's a 3.1.5, but notice ours is a 3.1.5. So there's some adjustments here that we have to make. Number one, we're going to have to adjust for that half a bath or build a complete other bathroom. Now, I know appraisals. I studied under appraisers. So when I'm sharing this, I'm going to probably know a little more than you, but I'm going to show you how to find this out. But for a bathroom, you're going to allow about $10,000 and rehabbing in this area is about $80, $200 a square foot. But let me tell you how you do this. You get together with an appraiser and you say, okay, if the square footage is the same as an extra bedroom, what value do you put on that? Don't get heavy in the cost method. Just look at what the appraiser says. I'll add $10,000 worth of value. Okay. There's two types of values. I say two types of values, but there's two types. If you're doing repairs, and that's one thing, you're not going to add value to the resale of the property. But if you're doing improvements and upgrades, that will. So adding a bath and a bedroom is an upgrade or an improvement. So you want to make sure that you understand what that's going to be worth. So we'd have to deduct $10,000 off the value of this property immediately, okay? Now, we also are going to have to deduct at least 5 to 10% because it's going to take, what, it's going to take at least 4 to 6 months to market for rehab and to get it on, to sell it in the market. So we're going to have to adjust for a declining market. So we're going to have to take about 5% off of that, even though we're use the latest comps here in September, but they're not October comps. There hasn't been any activities except for a few pendings that haven't closed in October. Okay. But just keep that in mind. So now let's go down here. This one here is an identical floor plan. Similar lot in September 17th. That's a Rehab A. Okay. Rehab A. Looks pretty nice, right? See how I classified these rehabs? A, B, C, so I know what the amenities is, because I don't want to overbuild. I don't want to overextend for the neighborhood. Now, when I'm talking to my rehabbers and my investors, which I call my buyers, I'm going to know this stuff, and I'm going to give them what I call a cover story, and I'm going to tell them, look, this would take like a Rehab B remodel in an A. If you get your, look, you don't need a lot of rehabbers and buyers when you're doing this kind of work. If you do a good presentation with photo descriptions and this type of analysis, these guys are going to love you. They're going to say, yes, I can't wait to do one of yours because they know it's going to be profitable. So you go out there and you find 1 or 2, 3 deals. You don't need 15 buyers or a buyers list to ship it out to. You really don't. Okay. So that's the problem. That's the thing with it. Okay. So very, very important that you understand that. Now, hold on just a minute. So what's up? Can you see the screen? You don't have what? I don't. You're not seeing the screen, is what you're saying. Oh, that's okay. It is. It's not moving because I'm not moving it. Do you see the analyzer, the calculator? Oh, hold on. Then you have to reconnect. At the bottom, it'll say reconnect. That's your connection. Okay, bye. Okay. All right, I took that to help them out because I know this is a Q&A. I want you guys to get the information here. I'm not like selling this or anything. Okay. All right. So now that you see that you've got these averages, we'll pull the average in, add it all up, divide it by 5 of the comps that we chose. They're all rehab comps. You can do the same thing for pendings and listings. So we're looking at 2 things. This is the average square footage of those comps. This is the average value. This is the average price per comp. And you look at over here, and you can see the average days on the market was 677. Okay. All right. Are you guys hearing me okay? Is everybody hearing me? Let me know if you guys are not hearing, yes or no. I want to make sure you guys get this. Okay. Yeah, John said yes. Okay. All right, good. Any questions so far on putting together these comps, these average comps, and averaging like that, and why it's important? Because if you have questions, now's the time to ask it. I'm going to be talking, but just ask your questions. I'm following this. Remember, you're going to do that for solds. We like to see at least get 5 solds. And then, of course, if you're going to get a pendings, that's good, but that isn't as good as solds. Okay. But because you're not going to know the prices until it does sell. Listing tells you what you're competing with in the market. So I do all of these: sold, pendings, and listings. Solds, where my market is today, anticipating where it's going if it's in a declining market. And I'm also looking at pendings to watch to see what the drop really is, because the pendings are going to tell us. And then the listings, sometimes the realtors are not on top of the market or the sellers don't know. So the listings can be all over the map, but they'll be adjusted pretty quick, pretty fast. But it does let you know how to compete in the market with other people that are on the market. So any questions at this point? If there's no questions, I'm going to move on. But if there's any questions at this point, please let me. Yeah, everybody hears me okay. All right. So we're going to come back here, and I'm going to stop the screen share, And I'm going to do another screen share again. I'm going to go back to this analysis because I want to show you something else that we're going to do, okay? All right. So at this point, I'm going to take you over to what we call the offer. Now, we have that information, right, on here. Okay, there's a question. What are the rule of thumbs for adding and deducting the differences of the year built, lot size, and etc.? Tom, that's a great question. I'm going to cover that, but basically, I'm going to cover that in detail when I get to the matrix. I've got a PowerPoint prepared for you, but I want to go into this right away, get your questions answered. Then I'm going to go who we are, what we do for you guys. But the answer is this. Okay, there's a range that you have in terms of the lot, the lot size. So let's say, and the amenities of the lot. So when you're looking at lot values, you're looking at views, the complexity of the lot. Does it have a grade on it? 1 to 4, 1 to 6. That means, is it sloped, right? Are you building over the side? Is it more cost of foundation? So is it going to drain right? So all of those, the two biggest amenities are, is it flat and have views? If it's flat and you have views, you're in the money. So you can adjust that, the value to that. So there is a premium values that you put on lots. It's more takes place in the custom homes as opposed to the track homes. And I'm trying to keep all my students in the track home areas as opposed to the custom home areas. Okay. The difference as far as the year goes, yes, it does make a big difference because it usually means you're going to have to upgrade electrical. You're going to have to upgrade plumbing. You're going to have to put in forced air and air conditioning. So all of those things play. And that's why you compare values. We saw that wall heater on there, and he still got 700, which is a shock. But you couldn't, honestly, I looked at that. You're going to have to put in heating and air conditioning to get over 700,000 in this market. So with that being said, it was a great question. So I went ahead and answered it for you, okay? That's how you do it. Now, let's look at this for a minute here. You can see here that I did take the square footage, but I haven't adjusted it to that bathroom. So I'm going to take $10,000 off of that bathroom, okay? Now, the purpose of this is to determine what is the offer I want to make to the seller that owns this property. So, here's the assignment fee we put in here, $20,000. So I'm going to pay the person that brought me the property. And then I'm going to go ahead and put the value of the property as we see it, adjusted for market and adjusted for that bathroom. And then I'm going to go through and I'm going to, I went through and walked through it and I estimated $125,000 in improvements. And I had another friend of mine who's very smart, who also does tons of these, walk through and came up with the same number that I did. Okay, so we were very close on the numbers here for the improvements. I'm going to show you in a minute how to do that in my webinar, in the PowerPoint. Okay, now I build in 15% of the ARV for profits. Why do I do that? Why did you take let me stop for questions. Why did you take $10,000 off of the bathroom? Because all the other bathrooms, Lisa, had a 3.2. This had a 3. This only had a 1.5 baths. It does not have a bath and a master. The other homes had a full bath and a master. So that means we had, regardless of, the hallway bath, we have to add another bath. It's going to take about 10 grand, okay, to build that, because we have to build it out. Now, you could say, oh, it could be 5,000, 6,000. I always estimate heavy when it comes to that, because we don't know if we're going to have to add footage to the property to do it, or if we can take it within the home. So to be honest with you, it could be a $5,000, on the bathroom. But just for looking at the comps to be safe, I would say 10 grand. Okay, that's why we did it. And then now, so we're looking at, I build the profit into this number already, that, and I include that in the cost because I want to make money on it. And usually this 15% works out to about 18 to 20%. Okay, and again, I'm going to talk to this is cost on cost, okay, cash on cash, ROI. And so I'm usually going to talk to my investors. I'm going to say, okay, what are you looking for? And if they're telling me they're looking for a 20% ROI, then I'm going to adjust that. I may stick in, 16% or 17% to get that up there to make my 20%. So that says I have to see. Now, this will calculate the offer that you're making, including what you're going to pay on an assignment fee. Now, again, I have a choice of assigning this or building it out myself, even though I'm paying an assignment fee. Now, look what happens. So that offer comes down to $365,000. So you put that new offer in, and will that meet my 20? Yes, it does. So maybe this number here could be 16%, and that means $372,000. So let's look at a $372,000 offer to get to that 20%. Okay. Oh my gosh. Okay, it's pretty close. About 19, right? Well, it allows me up here. What if that comp came in at 750, and I can support 750 with that property with $125,000 rehab? Then, oh my God, he's going to get 26%. Well, whoa, wait a minute. I'm going to make $35,000 on that property, on that hotel. So what? I can bring, oh my God, look what happened. I got to put minus. I said, oh my gosh. So I'm going to put $35,000 in here. So he's making 23%. So, but then I can make a higher offer too, okay, of $392,000. So those are the three numbers that you're going to work with. Now, I know that sounds a little confusing. So you're working with the ARV, you're working with the rehab, you're working with how are you going to get my buyer, my investor, 20% if that's what he wants. Somebody says 10%, work on 10%. But how am I going to work that? So I'm going to, and how much can I make by getting him that number? So it all keys down to what that purchase is going to be. Now, let's go back to the 712, which I adjusted for in the 702, right? Which I adjusted for that bathroom. Now, here's what you guys need to know. In a declining market, I showed you right off the bat that this thing dropped. Okay, there's two comps, one in July, one now, how it dropped off almost like $70,000. So I'm going to take 5% off of that. And I'm going to say I'm going to take $35,000 off of that, because I know it's going to take 6 months and that market's going to decline on that. And I want to show my rehabber, my investor, what I took off to allow, because the first thing out of their mouth is going to say, well, it's a declining market, and they're going to use it as a negotiation tool. But I'm smarter than they are, and I beat them to the frickin' punch. So they're not going to squeeze me that way, okay? So here you go. So I'm going to take 35, I'm going to take at least 5% off of that. So that means the new price is going to be $667. So let's go $670, okay? So let's say just $670, I'm rounding it up. Now, what does that price represent? Okay, I want you to stop and really ask a question here. What does it represent if I took off for the bathroom and I drop 5% off of that value after that, $670, and that takes in a declining market over the next 6 months, because that's the trend. You saw that little trend going down, right? Now I'm going to tell my guy, I'm going to say, look, this is what we have to do to make money. So that means that offer's got to be what? Oh my God, that offer to make money is going to have to be about what? Let's say 330, right? To make the 20%. There's where the offer has to be in a declining market. You see how that works? Okay. That's how that works, folks. That's how you do it. Now, you may not be able to get that as a wholesaler. Maybe you're only going to be able to get 10,000 out of that. We'll see. 10,000 makes them a little bit more money. So maybe you could make, let's just try 20,000. And you may not be able to buy it. Oh my, put it in the wrong place here. You may not be able to buy it at that price because the seller says, I'm not selling you that. Are you crazy? Okay, I'm not going to sell that to you. So what if we can get, maybe we go down to 20. What if the seller would say, I'm only going to give you $375,000 that property? Now, what are you going to do? Not $3,375,000, folks. 375. You see how it works? I put 370. Now that seller is stuck on 3. Okay. Now I got two things. I could try to sell my buyer, the rehabber, that, hey, you can only make 14% on that. I don't think he's going to be too happy with me. He may not. You got to know who your buyer is. So maybe you're going to have to drop your fee down to 10,000. Okay. All right. We with me so far? 10,000. Now let's see. Oh, that brings it up a little bit. I still have the expense of rehab. I got to pay for the commission to sell the property. My gosh. what can the offer be? And he's only going to take 375. So this isn't really, this is not really too good, right? So what else if the seller says, I'm only going to take 375, then maybe your wholesale fee can only be $5,000. Or your person's going to accept the fact that they could make 90,000 because you did your homework, right? You did your homework. And maybe this guy can list the property and only end up paying 3% and put it on the MLS because he's got a buddy that he makes his 100,000, right? He should be pretty happy with that. That's how you do it. That's how you work with the comps. So now you've got your comps over here, right? That will work with that, okay, because you did your homework. Now you got your offer over here. Now you're going to present your deal analyzer and your comps and how you come up with the offer to your investor. And your investor is going to look at that. So you got a lot. Now, when you guys come to me, I want to see this. I want to see the comps. I want to see the photos, the descriptions. And by the way, when you pull them off the MLS and the MLS does it for you, terrible, because all they look at is numbers. You have to drive by the property, look at the property to see if that makes sense to you. So right now, okay, we're going to go ahead and get out of here. We're going to stop screen sharing at this point, and I want to take any questions so far about how you use the comps, how you adjust for the declining market, and how, okay, and thank you, Lisa, for the bedroom. Any other questions at this point before we go on? And I'm going to show you how to build your, what we call rehab values. Okay. Any questions at this point? Oh, you guys are superstars here. Okay. So I want to just take a couple seconds to make sure all your questions are answered. Okay. You guys are pretty savvy on it so far. I'm not losing anybody. Okay. Nobody's. Okay. All right. Everybody knows now that you can give me good value. You're not going to call me up and say, hey, I got this deal and here's the address, right? Am I right? You're going to call me up and say, hey, man, here's the comps. I've driven the neighborhood. It's compatible. You know, here's what you can do. And I'm going to look at that and I'm going to trust you. I'm going to say yes or no. Boom. Okay. All right. If you had to leave for a family emergency, you're going to get this on a replay. Okay. And we are going to stick it on my website for you to help you guys out. All right. All right. So let's go into, I'm going to do some more screen sharing here. And now I'm going to go take you to, I'm going to take you to my PowerPoint. And I'm going to teach you some other things. Okay. Here we go. Okay. If you have any questions, please write in your questions. Okay. All right. I'm going to start at the beginning. I want to make sure your questions are coming in. Yeah, you know, if you guys want that Excel sheet, absolutely. You just have to email me, you know, at, here, I'll put my email in here, right? And you just have to email me at Gary at REI. If you've been through my classes or my training, you have it as part of the package. Okay. There's my email right there. Okay. So Tong Lee asked this question here. Okay. With this approach, does it mean that the properties not listed or sold on the MLS are not as useful since we can't know the condition inside? You know what? I would say this. You always want to write, Tong Lee, your contracts subject to those conditions of inspecting the property and put a contingency in there, because you can look at 1,000 pictures and you're just not going to get the story. The MLS is probably the best place to find listed and sold. But again, doing a desk review and then driving by, doing a drive-by, or actually visiting the property is the best of the three. When you put it all together, you have a pretty good feel. I'll give you an example. Okay. I was at the property in Orlando, and when I went to Montego, and I looked at that property. It was in a similar neighborhood. I felt really good that this property, if we put the money into it, we could make some money on it, even in a declining market. So I hope that answers your question. Okay, the MLS is good, but again, it's all done on algorithms. It's all done on averages, and you got to adjust those. You got to. This property is not what I want. This property is a good comp. You have to make those decisions to make sure that you got the right comps. Okay, can everybody see my screen right now? Okay, I need a reply from you. Inside the properties, if you go inside, they show you the pictures on the MLS, and that's a good place to go to look at them. Absolutely. Okay. Yes. Okay. Good. You got it. All right. Well, first of all, you guys know that I owned REI Fortunes, which is a real estate training and investment company. And the owners are Gary and Louisa Massari, along with some special friends of ours, and also our partner, Ginger Crystal Faith. She's our wealth coach and acquisitions officer. Between the two ladies, they train you, they put you on tour, they take you out, do everything they can to help you guys get deals. Now, we designed REI Fortunes for one reason. I just want to give you a little background. Because we found that people do not have local mentorship. We're spending thousands and hundreds of thousands of dollars, I'm not kidding you, on educational programs that were just getting dust and they weren't making any money at it. So there's a huge market right there that we're catering to, people that want to get started into real estate and want to learn wholesaling and fix and flips. We're going to stay in that lane, and we're going to help you guys do that until we can get you up to buying real estate to invest in it. So the idea is that we charge money for coaching. We do, and we'll be upfront with you. We charge money for events that we do, but they're very, very low, very inexpensive events. We offer a lot of mentorship and a lot of coaching for the value. So the reason we do that is because we want you in the family, and we want you to do deals, because if you bring the deals to us, we make money. It's as simple as that. Now, I've had Masha with us. She's my social media marketing strategist for 5 years. Dimitri is my IT guy in support. So these guys are behind the scenes. I'm going to put them on our website. They've been with me quite a while, and they're an excellent team, and they're smart and sharp as you can get. Okay, they know their stuff. Okay. Now, we also hold 2 great meetup groups. We're going to, through December, they're going to be the second Thursday, third Thursday. Third Thursday is coming up Thursday. The guy speaking this coming Thursday, Bruce Kellogg, he's going to teach on seller financing. You want to make that one. That's going to knock it out of the park. We are going to be changing to Wednesday starting in January. We'll be notifying you. The places will be the same. So I want to give you a heads up that we're looking at the second Wednesday and third Wednesday because it conflicts with other people we work with in the Bay Area. We actually do strategic alliances with 2 other groups in the Bay Area. That's Lori Graymont in San Jose. She has the largest meetup group in the Bay Area, an investor club. 78% of the people do deals in that club. So it's a great place to go on the first Thursday of the month. And the last Thursday, Raul Luna, my running partner there, I love that guy. And we do events with him. And he's the last Thursday of the month over in San Mateo. Again, a packed out house, 100, 150 people show up. We want to get you in that community of investors to help you out. Making money now is nothing more than a meetup group created to build community and build relationships. So you have all the resources by coming to us, getting into the family. We want you to be part of the family. You can do more deals and make more money. That's the whole idea of giving you the community and the education and working with us in partnership. Okay, we're doing it because we want you, we like you, we love you, and we want you to make money. All right, REI Fortunes LLC is a real estate training investment company. It's committed to give you the best education and support. Again, local, hands-on is where we're at. That's our market. Okay, to be successful and have a profitable real estate business. Now, let's look at the meetup. You're going to get community, local support, networking, team building, partnerships, education. We are going to be teaching at our meetup groups. Okay, Ginger brought this up. We do a module of teaching, and we're going to take 15 minutes every time, and we're going to teach you something about wholesaling and fix and flipping. Okay, and we're going to be running these type of webinars too. So we train you to do deals with you. More deals, more prosperity, more fun, right? We got a little thing we love, and we kid around, have a lot of fun. We call it the deal dance. Okay, so if you don't like the dance, we might not be the people you want to run with because we love the deal dance. When we get deals, we want to dance. Okay, affordable education, local mentorship, coaching, encouragement, education and training, and real estate marketing. That's our lane, and we're going to stay in that lane. Here's the things you should know about becoming a professional wholesaler. Create a wholesale presentation packet with comps, photos, property descriptions, and a map. Now, I'm going to tell you something. If you write a cover letter telling everybody that you did a desk review, you did an on-site review, you did a location review, and you write that in a summary, I'm telling you, you're going to have more business than you know what to do with, because every other wholesaler out there is just throwing property addresses at us, and I'm getting tired of it, right? You don't have control over that property. You don't have anything. Now, if you're going out there bird dogging and you're finding these deals, I love it, but put it in the proper perspective analysis for us, and then we'll tell you yes and no, and we'll do it very quickly, very fast. If you're not in a position to write the contracts, we'll write the contract. You're going to make less money, but you're still going to make more money than, you're still going to make a lot of money, 5 to 10 grand. That's a lot of money, right? But we'll write the contract for you and with you. Now, I want to make it very clear. When we take you out, you're on our time. We're not charging you for it. Okay, so if we take you to our deals and follow up with our people, those are not your deals. We're not paying you for it. Okay, you're not paying us. We're not paying you. That's crazy. But if you go out and you do it on your own and you bring deals to it and say, hey, would you come and meet with us? That's your deal. And I'll sit there and I'll help you close the deal. But you got to find the deal. We're not in the business of giving you deals. I want to be very clear. We're in the business of helping you find the deals and mentoring you through that process. And that's where you're going to make more money. Okay. All right. I want to make clear on that. Know your buyer's needs and expected ROI. So you're going to ask them questions like, what areas are you looking for? What square footage? What sales price? What do you expect to make on this? And then you're going to ask them questions like, do you have the financing available? Do you have proof of funds? How many deals have you done? See, you are analyzing these people and you're qualifying them. No more begging for buyers. I love these guys get in the business. They put out they build this buyers list. They buy it. They shoot it out to every. No, your buyers and your rehabbers are going to have to qualify with what I'm teaching you to work with you. I'm reversing it. It's reverse marketing. You are the expert. Okay. So that's why I'm taking the time giving you this type of information. Can everybody say amen to that? Okay. That people are going to want to work with you instead of you running around begging buyers to look at your deals. Okay. Summary of rehab cost and matrix. I'm going to go over that with you. This is a really cool deal. You're going to love this one. What we'll be covering in this live webinar: set up marketing funnels to generate leads. I'm going to go over that a little bit. Build a deal criteria to give you profitable leads. Absolutely. By working. Yes. Thank you. Amen. So you're working smart, not hard, and you want the business to come to you. And we're going to teach you how to leverage and convert so you're in position to build your teams to bring you deals to do what we're doing. How cool is that? Right? You guys think that's cool? That you got a team? I just came in this morning. I got a lot of my new people sitting in there watching this webinar right now. I came out with a big old staple hammer, all right, that John and I, my buddy, built, and I showed them what they're going to do, and I ordered 200 of them, and we're going to be putting, we pay cash for homes all over the Bay Area, okay? And the deals are going to start flowing in like crazy. So we teach you what we do. Decide if you want to wholesale or rehab. Okay, and we want you to call me. If you want me to write the contract for you, you call me, because we can make you some money on those deals, okay? All right. When it comes to marketing and lead generation is king. There's no other question about it. You want the deals to come to you. Master one marketing technique at a time. Start with pre-foreclosures and foreclosures. They're the biggest discounts, the highest profit, and they're going to get really, there's going to be more and more of them coming up. I'm telling you right now. Two of the best software packages you can use are Property Radar and Realty Track. I use Realty Track. Okay. Yeah. We call it the BAMR, right? Good going. I like Latia's on here. She's our new acquisitions officer. She calls it the BAMR. Okay. Isn't that funny? We buy fugly homes. Oh, I love it, Joe Kennedy. We buy fugly homes. Houses. Oh my God. I love it. Okay. Good stuff. Thanks for letting me have fun too. Okay. Are you guys seeing the slides okay? The slide still shows we can help you get going. No, the slide should be changing. Let's see what's going on here. Let's see. I'm going to change the slide in a minute. I want to see what's going on. What slides are you guys seeing? Okay, can you guys see are the slides there for you? You should be on a slide that says 4 marketing tips for more deals. We can help you get started. That's your slide. Isn't that funny? This thing, okay. So something's wrong here on the slide here. Okay, hold on just a minute here. We're out of that one. Okay, I gotta adjust this for a minute here. Okay. All right, guys, I'm going to stop the screen share and put it back on again because it's not picking it up. Not seeing it. Okay, let me go. Stop. Got to see my ugly face again. Here we go. Woo-hoo. Okay, let's go on the screen share again. Where's that slide? Share. Okay, this is the one that should come up. Okay. 4 marketing tips for more deals. Okay, you guys can see that? All right, you guys can see that, right? Okay, good. We're together again? Okay, good. 4. Okay. All right. You guys, if you want to get deals, I'm going to tell you, honestly, when you're dealing with foreclosures and pre-foreclosures, you got to know the timeline in and out and what the options are. If you don't master that, you're going to be so weak at the front door, you're going to suck. You got to know what the timelines are. You got to know that there's 60 days, what the the NOD date is, and that it's 60 days down the road. I just got off the phone with one of my guys that I'm working on. It's a great deal. It's probably $150,000 profit for me. I just told him this. I said, look, you're in trouble. This is the way I talk to him. You're in trouble. You understand that if this goes to foreclosure, that you're an HOA foreclosure and you can't, there's nothing I can do. It's the worst foreclosure you can have. If it was a lender, I can help you out because I can show them a contract, proof of funds, and stop it and get delayed so we can get you back on the market and get this thing taken care of and close escrow. But an HOA, those things are so complicated and so terrible. And if you don't have plan B, you're going to lose this. Now, guess what? I says, do you want to be blindsided by a declining market and all of a sudden your equity's all shot? Or do you want us to have your back for you? That's the way you got to talk to these people, folks. Okay? Yes, the slides. Yeah. We'll get you on the slides. The important ones are coming up, DF. So we'll get you on those slides. I'll send you guys the power. Actually, this whole webinar is going to be on replay, okay? All right, 4 tips. You want to call them first to make an appointment, and you use skip tracing, and we teach you that in our workshops, all right? So that's one of the most important things. Call to make the appointment. Then you want to use direct mail because if you use direct mail, they're going to be calling you, but you got to have the right message and the right postcard and the right letters. Then you want to put tours together and knock on doors. I got 5 people over here in my house right now that are learning how to do it. We're putting tours together, man. We're going to just scream signs all over Oakland. We're going to knock on doors. We're going to get this thing rocking. So you got to, then you got to meet with distressed owners personally, and you got to know how to talk to them. They got to know that they got to know, like, and trust you, and that you know what you're talking about, and they got to invite you into your home. So you got a lot of, relationship building to do to get these people to go with you. Are you with me? Okay. All right. Any questions on what you need to do? The 4 things you need to do. You need to call them on the phone, direct mail program, knock on their doors, show up on a tour. Okay. You pull those leads off of either Realty Track or Property Radar. You knock on the door, or you hire somebody to knock on the door, right? There's about 4 or 5 marketing funnels that I really work with you in my programs. I teach you, to do. And I think you need all 4 of them going. And then you meet with distressed owners personally. That's the way you got to do it. Okay. So build your marketing funnel. We do give you a toolkit. I'm not here to sell you this today, but if you're on the webinar and you haven't bought it yet, you really want to get your toolkit and get armed and dangerous here. We build you a website and a capture page. Why is that important? Because if they don't know their options and you educate them, who are they going to come to? You or the guy that's just pushing postcards at them? We'll pay cash and we'll buy your homes. Which one's going to get the deal? You. Because they know you, they trust you, because you're providing information, you're providing plans, strategies, facts, decisions. You got their back covered, man. All right, business cards, business brochures let you know that you're in business. Door hangers, obviously, if they're not there, you give them door hangers. You mail your business cards and brochures and your letter. They know that you guys are professional. You know what you're doing. What are you doing? You're establishing credibility, that you know what you're doing, that you're a foreclosure expert. At the same time, you're building rapport with these people and learning to know them. Okay. All right. I have some of my guys I'm talking to now that are going into foreclosure that call me up and said, you're the only friend I have. This, when you really get to, then I got guys calling me up, I can't get through the front door. Nobody's answering it. Or this guy told me to get lost 5 times. Give me a break. Okay. Get out there and do it all. You call them, you meet with them, and you start educating them. Don't, here's somebody went to close the door on me. Here's what I said. The worst thing you can do right now is close the door. And don't tell me you got it taken care of. You got a track record of going into foreclosure every 2 years. I'm here to help you. And I stuck my foot in the door. Now, I know you're probably not bold enough to do that. And you know what? And I said, I'm here to help you, at least to have a plan B so you don't have to go through this again. Do you really want to go through it again? Guess what? He let me in the door. So, okay, that's how you got to be. All right. Door hangers, bandit signs, mailing list. All of these are important to get your toolkit. Okay. Here's what it looks like. Here's a toolkit that we offer you guys. It's done for you marketing. It's very inexpensive. We put it all together for you. Get out there, get you branded, get your brand message, target your areas. I'm going to start teaching you guys how to do farming and zoning, target zoning and wholesaling, where you can pick a neighborhood that's got a little higher rent to ownership ratio. And I'm going to show you how to farm the neighborhood and get these deals before they even get on the market in foreclosure. How would you like to hit them before they even get on the foreclosure list? Would that be cool? Can somebody say yes? Yeah. So I'm going to show you how to do that. That's going to be part of our instructions and teaching. See, all our workshops, we're going to do something a little bit different there. Okay. All right. So deal criteria starting out. Look for properties with 50 to 65% equity position in them. Okay. Look for properties with 50 to 65 equity position. Single family, 1 to 4 units. Good location with no power lines or busy streets. It's still a location. I mean, guys want to make deals next to Highway 101. Are you crazy? I ain't doing it. I'm going to be part of that deal. Don't bring it to me. It's a declining market. In a hot market, yeah, they sell. They put dual pane windows in it, and they probably barbecue in an enclosed Florida room, right, with dual pane windows. I don't know, but I don't want to live on the freeway with all that noise. I don't know who does. Okay, so when the choices are down and the prices are up, they'll buy it. But when a declining market, they got more choices in inventory. Do you think they're going to buy it? No. You better think about renting it and paying off the difference between what you can get in rent in California and what the loan is, because I promise you're going to be shoveling some money to the lender on that one. All right, good location means everything. Medium high school ratings, medium to low crime ratings, close to schools, shopping. Redfin has that all, man. You can click on there and see the school ratings, the crime ratings. That's all on your fingertips. You can do it on your iPhone. You can do it on your Samsung that keeps exploding and burning. Do it on whatever you, I'm just kidding, whatever you want, okay? You can do it, all right? Okay. Analyze your deal for potential profit. 3 things you got to know. We went over that. Average repair value, rehab cost, and as is value. Okay, now here's where I'm going to come with a meat. When searching comparables using the MLS, Redfin, Trulia, Realtor.com, Zillow, Realty Track, you can go through all of those. They all have comp sections. They all can find the highest price, and you can also find the amenities, the styles, and conditions. But I'm telling you, Redfin beats them all, okay? Do what you want. I'm a Redfin guy. All right, average repair value. 5 items to review in similar homes: square footage of house, bedrooms, lot size, amenities, age of home, and condition. That's it. You don't complicate this. Only 5 things. Take a screenshot of that right now. There's only 5 things that you guys need to know. Okay. Square footage of the house, bedroom size, lot size, amenities, age of the home, and condition. Okay. What are the two types of conditions? Functional obsolescence. And what else? Physical obsolescence. Functional means a floor plan is terrible. It's chopped up. Looks like a maze. Physical is what? The condition of the property. Okay. Those are the two. Why is that important? Because if you're dealing with physical obsolescence, that means you're going to need a new electrical system, a new plumbing system, new air conditioning, new heater. You're going to have to gut it and start over. Okay. That's why. And functional, if it's like all closed in a rat maze and you're not having the open, because everybody wants open today. So, you got to make it open. You got to bang some walls out, So, and bring it open. Everybody wants to see you cook in the kitchen from the family room while they're watching TV, I guess. I don't know. That's the thing today. All right. Read the text in the general description. Look for words like this: remodeled, updated, super sharp, immaculate, new baths, new paint, sell fast, granite, new kitchen, floors, like new, Anderson, windows. Why is that important? Why, looking in the descriptions for these things and what I showed you, the detail thing that I showed you, it's because it's going to tell you whether it's a remodel property or whether it's an average one that hasn't been remodeled. Those prices have to be separated. Okay. Any questions so far on comps? I think we covered comps like crazy. If there's any last questions, get them out, because I don't want you going away thinking that you didn't cover this, that there's a difference between, rehab values and as is values, because rehab values is what's going to make it or break it. So you got to know what the rehab values are. Okay. All right, good. I'm hoping we got that down. Okay. Look for solds, pendings, average at least 3 homes. And by the way, when you're pulling those comps, make sure that you pull within a half-mile radius. And make sure you don't cross freeways. It's that simple. A half-mile radius. And then you want to look at what? You want to at least get at least 5 solds if you can't get down to 3. Be careful if you don't have any solds in that neighborhood. That story is singing at you very loud. Okay. If there's no sales in that neighborhood, okay, what possible kind of neighborhood can that be if there's no sales? Okay, in that neighborhood. People love their homes. They're sitting back waiting for the market. Good clue. Probably a good neighborhood. Okay. So, there's a lot of clues in here when you start looking at solds and pendings. Divide homes sold by total square footage. We got that. Apply the average sales to the square footage you're trying to apply. That's your ARV. I taught you that already. Always, when possible, drive by and take pictures. Compare pictures online to other homes in the neighborhood. I'm telling you, the pictures will not tell you what this home is valued at, okay? All right. Okay, I'm going to stop for questions. Can you put up the slide of all the places to go, like Redfin, MLS? Okay, let me go back here a little bit for her to see. Sorry, go ahead. Take a snapshot of that, Lisa. Any other real questions real quick? Redfin's really the best one, Lisa, to be honest with you, because it's tied into the MLS. That's the reason. Okay. You're looking at the MLS when you're looking at Redfin. Okay. If you don't have Redfin and you're doing the other ones, you may not. Realtor.com has tied into the MLS. I don't know about the others. Okay. All right. Let's get on with this thing. So you want to take a snapshot of the picture. Here's one in my neighborhood that last sold for $1.4 million, right? 1,600 square foot, 878, built in 1957. That's in my neighborhood where I live. I just did this. Okay, on Laguna Court. That's in Danville where I live. Okay, sold in the August market. I promise you, those prices are not there. I bet you this home is about 1,112 right now. Okay, but you can go on to Redfin and look at across the top overview, Redfin's estimate, which I told you not to pay attention to. Listing details, very important. Tour insights, very important. Property history, when they listed it, how many days on the market, very important. Public facts, school ratings, it's all there on the top. Click, 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 click. Redfin, you can drive along, you can look at a property within seconds with their little map, click on all the little properties around it, and then find out and drive by those properties. I'm telling you, within 10 minutes, you have this value down. I love it when these realtors say, well, I'm so busy, I can't pull the comps. Can I get them to you tomorrow? Give me a freaking break. There's not a realtor out there that can comp as good as you can if you watch this 3 or 4 times. Okay, and I'm a broker, I know. All right? Because I used to compete for listings. I was a top listing agent in my company. When I first started out with real estate, I had over 100 listings in 1 year, broke every record out there because I knew comps and they didn't. Okay, so let's just be honest with you guys. Incredible opportunity with prime Westside Danville Court location with short stroll to downtown Danville, charming single-story rancher, 4 bedrooms plus full luxurious acres, spacious room features, open ceilings, open wood beam, okay, custom light fixture, beautiful, blah, blah, blah. Okay, let me tell you something. This home, they've done a nice job. Look at the granite countertops. That's what I want to see. Tile flooring, I want to see it. Hardwood floors, quartz countertops, recessed lighting. Those are all the clues that this one, entertainer's dream or special, this one is hot. This is a rehab home. Now you know what my home is worth in my area because I have a nice home. All right, so now let's look at this one. Sold 8, sold back in 5. These are 2 other homes in the area. See those little things there where you go C, D, and I already showed you that earlier. You click on it and away you go. All right. So looking at the as-is values, the same as the ARV, the only difference is you're looking at the lowest price homes in the neighborhood, not the highest price. That's how simple that is. It's not rocket science, okay? You look for distressed words like price drop, motivated, fixer, REO, foreclosures, okay? And Redfin actually tags them with a little red house on it, by the way, the good deals, okay? So does Realty Track, and I know Property Radar does too. And the ones that you pay for actually send those to you in the emails. They notify you. How cool is that? Look for similar like properties. Do your square footage averages, determine value until you know the repairs. Now, rehab cost. This is a joke. I came back in the industry in real estate from running a marketing company for 10 years. I couldn't believe what they put you through to determine rehab. I used to build homes. So I have a little background here so I can judge it pretty accurately. Okay. And I'm telling you, honestly, to get good values, and this is what's going to make or break you, you have to do the desktop review and you have to do the drive-by. Please trust me here. Okay. You can't do it for pictures. It doesn't. That's what made me different. That's why I won all the listings when I competed with other realtors. I said, did they drive by and look at those properties? Did they give you the inside of those amenities? When I sat down with my sellers and I told them room by room what that home looked like, they couldn't believe it. And then I showed them the pictures. Who do you think got the listing? The guy that gave them averages, or me give them line item by line item, room by room descriptions of those properties and how they compare? Of course I got it. Take the rehab contractor and ask this question. What does it cost to rehab a complete kitchen in the luxury home for $1.5 million? What does it cost to rehab a complete kitchen in a $750,000 home, a $500,000 home? It doesn't take a rocket scientist to figure this out. How simple can it be? So I built you the matrix. Nobody has this. I'm releasing it to you first time today. I built the matrix by consulting with rehab contractors. Now, you have to build your own matrix. You can't use mine because I just pull the numbers out of the air. But look at how I broke it down between 500, 750, $1.5 million to $1 million. If you're in the business, I'm telling you, stay under $1.5 million. But you're going to know what those kitchens are going to cost. Whether you're doing a rehab A, B, or C. You got to build your matrix according to rehab A, B, or C. And then that's all you have to do is you walk through the home, kitchen, you plug it into your checkoff sheet. How simple can that be? Master bath. 5,000, 10,000, 15,000, or 20. When you get up to 20, all you're getting is a spa with a few jets in it. Give me a break and some marble and double sinks. Come on. There's only so much you can do to a bathroom. What are you going to do? Put a picture of Mona Lisa in there? Okay. I don't care if it's in a $5 million home. There's only so much. What are you going to put? A debate. Everybody hates those things anyway. Okay. Then you got it in your shared bath, your hallway bath. It's a little bit cheaper, right? Then, of course, you're going to get up under your roof. Some of those roofs, and the 2 million can get up to $30,000-$40,000. Okay. All right. They get real fancy with their slate and all the other cool stuff that they do, the fire retardants. Okay. Outside paint, inside paint, remove walls, flooring, landscaping. I'm telling you, do not use this. I'm saying it over and over again. These are guesses. You call a contractor and you build this matrix in your area with the area that you're targeting homes. And folks, you're going to be plus or minus 10%, man. You're going to nail it. Is that cool? Say yes. I want to see some yeses. Is that cool or not? Use the matrix. Consult with a contractor. Okay. That's how you nail this thing. Oh, if you guys don't like it, I'm going to quit. Okay. Here you go. You can build your cost estimate to roll up to summaries. Yes. It's very cool. Right? Okay. Very, very cool. Okay. Now, interior, 500,000, 750,000, $1.5 million. Okay. 2 million. Right? How cool is that? You guys aren't on my marketing program. Should get on my marketing program and get out there. I just ordered 200 bandit signs, and I'm telling you, we're going to be doing deals, and you're not. Okay. So it's up to you. Okay. 500,000 interior, exterior, mechanical. And I broke it down for you. Mechanical is usually Havoc, plumbing, and electrical. And then others, the permits, the demo, the dumpster, all of that stuff, right? So, and then also you got to put in your closing cost and all of that too. But while you're going through, this is strictly rehabbing, repairs and rehab, remodeling. And you want to build your matrix up to lay it out in detail. Get with a contractor and get all of these prices in there so it summarizes up to one sheet. How cool is that? And then you're ready to knock it out of the park. You're going to take your comps in minutes, right? You're going to have your cost summary in minutes, and then you got it all put together. Is it worth my time? Is it not worth my time? Boom. And you're ready to go. Okay. So how many of you guys like to go boom? Give me a yes. Get it done. And spending hours and hours and hours on it. You have a cost matrix for rehab. Okay. You got your little, offer sheet. You got your comp sheet. Okay. It all flows together. You got your desktop done in minutes. And then you just have to, now you know where to put your time, and you can drive out there and don't be cheap now, and don't be lazy. Please drive out there, look at the properties, do your neighborhood. I'll tell you, I got so excited when I went down to East San Jose, and I thought, oh my God, this home is in such a terrible street. I drove over to another street that sold for $720, and I looked at that street. I couldn't tell the difference. I said, yes, I was so excited. Boom. I was so excited. Man, it was so cool. Oh my gosh, it's so exciting when you find those deals. Okay. Yes, they make sense for you guys. All right. If you're not in my program yet, I want to show you something here. Okay. Hold on just a minute. Let me see what this is. That's my chat. That's my polls. Okay. Hold on. Okay. Oh, here we are. 6% of you want to do long-term strategies. 12% want long-term wealth building strategies. 82% want both. That's the right answer. Good. All right. I offer a strategy session. I'm going to end this poll. Okay. I'm going to give you guys a strategy session right now. I'm going to go back to your desk. And here's all you do to get a strategy. There's 2 things you need to do to meet with me. You fill out this. I'm going to put it in here in the notes. REI Fortunes. Oh, wait a minute. You're going to have to do the first one. I want you to fill out, in fact, I don't want you to set an appointment with me. I want you to fill out this form right here, because I literally take this very, very serious. And if you fill out that form, the questionnaire form, I will get in contact with you, okay, and we'll set an appointment with you. So it'll be really, really cool. Why do we need to stay under $1.5 million? Because a lot of people in this area, first of all, the higher homes are declining very quick, very fast. And if you're experienced and you're already up there, but I teach a lot of people are just getting into real estate and they want to up their game in real estate, and they may they may not have your knowledge. So, buddy, if you want to, if you're at that level, God bless you. But I don't want to take the chance of sending people into the wolves' dens on those higher price homes when they're just brand new in real estate or just getting in it. So that's entirely up to you if you're there. Okay. All right. I like the fact that you are here. All right. So we got that. I got that up there right now. I got one other thing I want to show you. Okay. I'm going to put this up there for a little bit while we finish this up. And this is now on the webinar. I'm going to go ahead and you guys can go ahead, and I've only got openings for 2 people left. I only take on, really, I can do about 10 a month. I've got 15 orders right now I'm filling. So I got 2 openings I'll take during November, and then I'll open it back up to December. I may take 5 more. That's it. Okay. So if you can't get you now, I'll take you later, but I need an interview. You need to qualify. I'm not doing this for everybody. I'm doing it for people that want to go out there, get deals done, make money at this, and that are serious. This is not selling my programs. It takes too much coaching and mentorship. Lisa will tell you, okay, she went out with Ginger. Tyler's been out with, with me and Ginger. We put too much time into you guys. Okay. So that's up to you. All right. So there it is right there. If you want to get on board with us, I got a couple slots open right now, and we'll just leave it at that. Okay. All right. So there's your deal analyzer. I'm going to sit down with you, teach you that. I'm going to spend 4 hours with you after you get your marketing all done. You're going to spend about a couple hours with Louisa. She's going to teach you how to pull deals, do tours, get you out there. We're going to teach you how to do bandit signs, do your direct mail programs. And then we're going to teach you how to go after abandoned properties. I'm going to be all over this during December. I'm going to start teaching how do you find abandoned properties. And I'm going to start teaching you how to farm areas before they even hit, get this, they even hit the pre-foreclosure market. Okay. So I'm going to have you guys pick the area. So take some massive action, do something with this. We're giving you a great value here. Put together your presentation package. I'll review it with you and help you. Put a cover letter in there. Do the comps that you pick, their pictures, their descriptions. Do the comp analyzer, do the deal analyzer. All of that should come in our package, right? Okay. Build your rehab matrix. Get that done. Talk to a contractor. Steve Williams is on here. I think Steve will help anybody. He's on the team. He's a contractor. We'll give you more contractors. Okay. Get your marketing toolkit now. Okay, because I'm getting tired. I got too many people I'm doing it with right now. Get a coach to mentor you. Get done on the fast track and not make the mistakes, or you get done on the slow track, which you never get anything done. You never get any deals. And you spend a lot of money. Okay. And life gets in the way. You need a coach right there to tell you, hey, let's get going. Let's get going. I call my people. I tell them, I haven't got any deals from you. Get off your butt. Let's get going. You're not consistent. You're not putting into massive action. And they'll tell you, I call them. If they're not doing it, I call them. There's no excuses. Okay. Cause I'm doing it and I'm getting the deals. Okay. So you guys have got to get out there and do it. Okay. So attend our meetup groups. Schedule strategy sessions with Ginger and I. Fill out our questionnaire form first. Okay. Get into our done to your marketing. Attend our live training events. Get your coach to mentor you on the fast track. You guys are ready to rock it. Here's our meetup groups right now. You can go to my website at REI Fortunes. Take a snapshot of this.com. Meetup events, strategy sessions, reifortunes.com. Appointment Ginger. Again, I want you to do the questionnaire form first. Then we'll call you. Okay, I shouldn't have put that up there because you guys call me and you don't do the questionnaire. I don't know. The questionnaire form asks you everything. Where's your income? Where would you like it to be? What's your net worth? What would you like it to be? What are your interests in? Tell me what your problems are. I really dig into you guys when I get you into my sessions. So I know what you want. And I actually build you a business plan to get out of the mess you're in. So I can get you on and up and away we go. And we become partners and friends. I love what I do. Okay. Can you tell me I'm passionate about it? Done for you marketing right there. Take a snapshot of that. You can also click on this right here and you'll have it. And you can order that right away if you want to get going there. Okay. Live training events, wholesaling workshops. Click on that. We are going to be publishing 4 of them next year. The dates are up, but you won't be able to order them because we haven't set up the registration for them yet. We're going to 2-day workshops. We can't do it in one day. But they're going to roll up your sleeves, get it done, 2-day workshops. And we're going to do a wholesaling workshop. It's going to be late next year. We're going to do a lot on mindset, vision, developing that whole area. We're also going to do a whole entire workshop on fix and flip next year. I can't wait to produce that. I'm going to do it with Raul and Lori. We're going to knock it out of the park for you guys so you know how to take advantage of this market because it's going to be a great market to take advantage of there. Okay, we are going to continue to do our wholesaling, and we're going to do a wealth building 2-day workshop. We're going to teach you guys how to invest in real estate in every area of real estate. It's going to be so freaking cool. So next year, we're going all out to give you guys the best support, training, investment strategies you've ever had from anybody that's in the industry right now. I'm very proud of it. I love what I do. Okay. All right. That's it. Any last minute questions? I'm going to take any last minute questions right now, and I'm going to remove this offer. And okay, so I'm going to move some questions up here real quick. I want to get those questions answered. This one is 1.2 ARM 3450. Should we drop our ARV still? You know what, DF? You're going to have to follow what I just taught you and send it over to me, okay? Yeah, I just can't. These are the things I can't answer when you're just throwing the numbers at me. I want to see the photos. I want to see the neighborhoods. I want to see what the neighborhoods are doing. The trends in the neighborhoods, are they going up, down? Is it adjusting? Are we getting a lot of pendings? I mean, all of that is why I won't answer the way you put it to me. But if you do that, I'll promise I'll look at it, okay? Can't see anything to fill out or slot to get. Okay. Again, you can email me at Gary@REI. I think I already put this up for you. I'll put it up again. You can email me at this, and I'll get you all the information you want. Okay, Gary@REI Fortunes.com. Okay, so that'll get to me. All right. Okay, Don, where are the costs for the mentoring and the coaching? Don, the coaching is in my biz development on my website at reifortunes.com. Okay, so you can get there. But when you buy the marketing package, you got all the coaching you ever need. There's no upgrades, $15,000, $20,000, $30,000, that stuff. Okay, you get it in the marketing all the way, because it's designed for you to bring us deals. That's where we want to make the money, not off you, on helping you get the deals. Okay. I think you have to stay under $1.5 million in the San Francisco area. I really do. I know people, I'm not going to mention names right now, are so in trouble with properties they paid $1.4 million for, and I know they're going to lose their butts. I'm talking about $300,000-$400,000 chunks, man. So boy, you got to be careful now in this market. Okay. It is declining. Right, you got to buy these at really strong values, and the sellers haven't really caught up to where the market is. Okay, any more questions? Okay, how many of you guys enjoy the webinar? Can you give me a big yes? How many of you guys didn't like the webinar? I won't do it again. Okay. Wait a few more minutes. All right, John says, great job, Gary. Okay. Thong Lee says, thumbs up. Corbin, you need to be on my plan, buddy. We need to get you out there kicking some butt. Rick, I'm going to be working with you. Okay. All right, good stuff. All right. Hey, thanks, Arlene. Appreciate it. Good stuff, Steve. Steve's our contractor, by the way. He'll help us build that matrix for us. We are going to have like family meetings. I'm going to invite people to my home, do one day, take a Saturday and work with you guys. Make sure you brush it all up, you tweak it out, you get it clean. I just want you guys to win so bad. I just want, our whole thing's about getting deals, getting good deals, and getting you guys on the money trail really quick. Okay. I like what's coming up for the more training. Yeah, we're going to be really working on that for you guys. Okay. All right. Look, continue to put in your questions. I'm going to say goodbye, and I appreciate you guys being on the webinar, and I had a great time. Okay. We took an hour and a half. It was a long webinar. So good job, guys. Bye-bye now.